Hey everyone, Joe Bladek, Canadian Mortgage Weekly. Today we're talking about average home price and average closing costs on a Canadian home in Ontario. One of the things I'm really looking forward to as well is sharing the programs available to those who are buying a home in Canada, specifically Ontario. There are some rebates, which is great to put money back in your pocket, as well as tax credits, which is great news at tax refund time because there's a possibility that you could get that money back then, and some programs available to help with the funding of your down payment, and other programs available like refunds when you're buying a home and you have to pay closing costs. So if you're watching on TikTok or Instagram, I don't have the ability to share my screen, but if you're watching me on Facebook or YouTube or LinkedIn, then you'll see my shared screen here. But essentially, I'll just talk it out with you all as well. And first, we're going to look at what is the average Canadian home price right now. And that number is quite staggering. It's quite staggering. It's sitting at $709,218 as of uh, this is August 3rd, 2023. And one of the things that is hard for people to understand is that almost you need an impossible income to get into a house like this. And if you're doing minimum down payment, you're going to require an income of about $175,000 to be able to get into a home priced at this level. So an income of 175,000, first of all, it's quite unattainable. And a lot of people do attain it though by putting in 3 or 4 family members all together on one mortgage application. And then that way you have 3 or 4 incomes, and it's a multi-generational family and they're all living together. So that's one way a lot of people are doing it right now. And privacy is, you're just going to share the house with more people. So anyway, $709,218 is the average national home price. So where do we go from here? Well, we got to take a look at what the minimum down payment would be to get into a house at this price. So if you're looking at an average Canadian national house price of $709,218, then in Ontario, Canada, you will be required to put a minimum down payment amount of $45,921.80. What do you guys think about that? It's quite a large amount, right? It's about the average Canadian salary in Canada is the minimum down payment on this house. So that's $45,921.80 for a minimum down payment on a house of $709,218. And that is the average national Canadian house price. So, on top of all that, you're going to have additional closing costs part of your home purchase. And they're not as big, but they are due on closing day. And I'll just go through those right now with you. If you're just joining me, I have my screen shared on YouTube, Facebook, and LinkedIn if you can join me there. If you're watching on TikTok or Instagram, I'm just talking out the numbers. So average price of $709,218, minimum down payment $45,921.80. So the legal fees on a home purchase like this will come to approximately $2,500. That includes all the processing fees that the lawyer charges to set up your new mortgage, sign with you, and work with the seller and get your home purchase closed. You might be able to find a better deal, and I suggest that you get at least 3 referrals that you can call and get estimates from so they can price out a home price purchase package for you. On top of the legal fees, you're going to have additional closing costs as well. There's something in Ontario if you're buying land or a house or a condo, you have to pay land transfer tax. And land transfer tax typically works out to 1% or more of the purchase price. In this case, on an average national home Canadian price of $709,218, the average home price Ontario land transfer tax will come to $10,659.36. So that is quite a large amount of money. So I always can understand why my clients are blown away by that sum, because it's such a large amount of money to pay on top of your down payment and on top of the legal fees. And you're going to have moving expenses too, and dealing with uh, utilities and cable setups. So why would you want to move or buy a new place? Well, a lot of people don't want to rent and throw away their uh, rent money each month, and they want to own something. So if you're just joining me, we're looking at the closing costs that are typically on a average Canadian home. So average Canadian home price, $709,218. Minimum down payment for a house like this today in Ontario, Canada, $45,921.80. Legal fees, $2,500. You could probably find a little better. I suggest you always shop around. Ontario land transfer tax is $10,659.36. Now, you may also require an appraisal on your property, right? Most lenders will have some sort of appraisal program in place. So make sure you talk to your broker about how the appraisal program works. Some appraisal programs actually even rebate you a portion of the appraisal cost on closing day or shortly after. So there's some programs like that. If you ever have had to pay for an appraisal, you remember probably that you can pay by credit card or um, or cash or Interact e-transfer. Typically, they cost around $450. An appraisal will cost more for the following reasons. So an appraisal will cost more if you're going to need an appraisal on a rental property, because they're going to have to look at the different units, or if it has a rental property component to it. Also, you're going to have to pay more for an appraisal if the appraisal is a large square footage home or a home in a rural area. That typically is because of the extra drive time and as well as the extra research needed to compare properties, because not all properties are identical in rural areas as much as they are in urban areas. Okay. So $450 for an appraisal, if it's required even. A lot of times the lender might be able to do a drive-by appraisal or a desktop appraisal. So make sure you talk to your broker about how that all works and they can get it straightened out for you. Also, you'll have your home inspection, where you have a home inspector come out to inspect your home to make sure that your home is in good shape and everything is good that way, that the components of the home work, that the bones of the house are good, the roof is good, furnace is good, that you're going to be able to use the electrical when you move in, all the basic stuff to make sure the home is in good shape. That's going to be another $450. And so that all together becomes your closing costs. And I'm missing one. Can anyone guess which one I'm missing here? There's a big one here, especially if you live in the city of Toronto. And that is, you haven't guessed it yet, it's the Toronto land transfer tax. And the Toronto land transfer tax adds a huge amount to your closing costs just to buy in the city of Toronto, which is the limits of the city of Toronto. It doesn't include things like Mississauga or Brampton or Oshawa, but it does include Scarborough. It does include areas of Toronto like Etobicoke. So we have the Toronto land transfer tax, and the Toronto land transfer tax essentially on this, which would be an average price home in Canada, would be $10,659.36 added on top of the Ontario land transfer tax of the identical amount of $10,659.36. So if we look at adding up all those closing costs that we have reviewed this morning for an average price home, we're just going to do that right now. We're going to review the total closing costs on an average price home. And I'll just go through them with you right now that we've talked a little bit about each one. So the average price home in Canada is $709,218. On that average priced home in Canada, we have the minimum down payment that you can put down on a house like that. That would be the minimum down payment to get into the housing market. If you're a first-time home buyer, a second-time home buyer, a third-time home buyer, doesn't matter. But that would be $45,921.80. That's on an average house price of $709,218. Then on top of that, you would have the legal fees on your purchase that the lawyer needs to charge to doing the transaction. That's $2,500. From that, you also have the Ontario land transfer tax. That is $10,659.36. And in this case, we'll also look at doing an additional Toronto land transfer tax to consider properties in Toronto. That would be $10,659.36. Then you would have your appraisal, if it's applicable, of $450. Then you would have your home inspection of $450, which, if you're watching on Facebook, YouTube, or LinkedIn, you already see the numbers there. But if you're watching on Instagram or TikTok or X, you don't see the numbers there. And that's $70,640.52. So on an average price home, $709,218, the total closing costs are usually $70,640.52. That is quite crazy. That is almost 10% of the home right there. We're very shy of 10% of the home, but we're putting minimum down payment. So a lot of this down payment or closing costs actually goes to expenses in relation to getting the home. And some of the things I'm going to chat about here are either additional closing costs or some programs available that can help you reduce closing costs. So one of those programs available to help you reduce closing costs actually are appraisal refunds. So appraisal refunds are a refund program through some brokers that have relationships with lenders where they do a lot of business, and they are able to get back your appraisal in terms of a refund after the closing of your home. So say if you spent $450 on an appraisal, then you may be eligible for a refund of that appraisal amount right after closing, so you can get that $450 back and put it in your pocket so you can have some money to buy a new barbecue, say, for your home once you moved in. All right, so there's the appraisal refund program available. There's also a really good program. It's called the Land Transfer Tax Rebate Program, and I am going to cover that in some videos that I'm releasing later this week, and that is a $4,000 rebate on your land transfer taxes in Ontario upon closing. So you can either apply for that on a closing day, so you can get the rebate the same day you close, so you don't have to actually pay that money, or you can do it after closing. You can send the affidavit in and you can apply for that rebate after closing, and they will send you a check in the mail for $4,000. So that's some good money to put towards a hot tub or something for your new home after you've paid all these closing costs. Because we looked at the closing costs today. On an average price home, the total closing costs, including down payment, is just north of $70,000. So quite a bit of money. And then there's also the Toronto Land Transfer Tax Rebate. That is an additional $4,000 if you are a first-time home buyer in Ontario, and then you can actually apply for a Toronto Land Transfer Tax Rebate. Make sure you check out the City of Toronto's website for that information. And that's a land transfer tax that is paid to the City of Toronto within the municipal boundaries of Toronto. So, whoa, there goes my Instagram feed. Put that back there. Sorry, guys. All right, and then there's also what's called down payment assistance, and that is available in Canada. It's a program through municipal governments where they actually fund the down payment of someone buying a home. So that essentially gets you into a home with only closing costs. You would only have to pay land transfer tax and legal fees. A lot of the time that adds up to, for a first-time home buyer, under $5,000. So it's a really good way to get into the market. And these municipal programs actually are able to fund the down payment program, and it gets people into the houses. And it's a program where if you actually live in the house for 20 years, in most programs, you never have to pay this money back. And during the time when you have this money to be able to get into your home, there are no loan payments and it's no interest charged to this amount either. It sits there dormant, sort of like a loan in the background. And essentially, if you sell your house within the 20-year period, you do have to pay this municipality back. But if you don't move at all and stay in that house for the 20-year plus time frame, that money is free and clear and yours to keep, which is a great incentive for someone that is buying a home to not move out of that municipality again. And it continues a good continues on helping the municipality, but with property tax revenue and those people that they approve to contribute to the community in a positive way. So great program. I've helped a few clients get a home on this program, and it's actually fantastic to be able to say that because these programs are available in every municipality. Not every municipality, but most municipalities in Ontario. For example, in Simcoe County, Ontario, which is my municipality, of Orillia, Barrie, Wasaga Beach, Washago, Oro-Medonte, Bradford, Ontario, they have a program where the municipality will actually fund 10% of your home price. So if your house price is $500,000, then they will actually fund a $50,000 down payment assistance program to the person getting the mortgage. And you don't even have to be a first-time home buyer to be able to apply for a program like this. They more make it a restrictive on income type and the amount of assets you already have. So if you're obviously a millionaire, you're not going to be able to use this program to be able to get into the a home, but you can definitely apply for it if you qualify for the program. So that's a great way to get into the housing market these days, is to utilize one of these programs and put yourself on the waiting list to be able to be the next in line. So there's the down payment assistance program. There's the land transfer tax rebate program. I wanted to talk to you, just if you're just joining us now, the first time home buyer program income tax credit. And that's a $5,000 income tax credit on your income taxes that you can claim the year you buy your home. So if you buy your home in 2023, when you're doing the taxes for 2023, you'll be able to apply for this $5,000 income tax credit. And if you've paid a lot of taxes, you'll probably get some of that money back. So that's pretty good. And it's a great way to get some money back after you've bought your first home and spent all that money getting into the market. Because I remember buying my first home, I was scraping pennies off the floor pretty much just to close on the home. And once I did, it's like you have no money left because it all went to the closing. And it's a surreal moment because you own a house, but you have no cash left over. So it's a great way so these programs are a great way to get that cash back. There's also a program available if you get an insured mortgage, which if you get an insured mortgage, you can get a portion of your premiums back. And it works out to approximately 25% of your mortgage insurance premiums. When I see premiums ranging from $10,000 to $25,000 plus these days on these homes, and it all depends on the type of file. But I always recommend getting a quote. Keep in mind that mortgage insurance premium on a default insured mortgage isn't really payable upfront by the borrower because that premium is typically added to the mortgage amount when you're buying your home. So if your mortgage you're taking is $450,000 and your mortgage insurance premium is $15,000, then they will add this amount to the 450, and your total mortgage will start off at around $465,000, and you'll be paying it off from there to pay for that mortgage insurance premium. Some people I've seen have requested to pay that up front because they don't want it added to the mortgage, increasing their monthly payment by approximately $20-$30 a month. So they want to get that paid off ahead of time, and you can do that. So mortgage insurance premiums, you can get some of that back. So you're paying, say, $20,000, you'll get $5,000 back. And to get this mortgage insurance premium refund, you need to actually buy an energy efficient home. So to buy an energy efficient home, you need to make sure that it's Energy Star compliant and that it has that certificate. And once you get into that home, you need to apply for that program within the first 24 months of ownership. And essentially, you need to include that copy of the Energy Star certificate. And with that, you'll be able to get a premium refund on your mortgage insurer premiums that you've paid, uh, usually added to the cost of the mortgage. So I know we're talking a lot today about closing costs. And before I get into the mortgage news for this week, I'll just cover off this again once more. The average price home in Canada is $709,218. And on a home like this, there is a minimum down payment required, and that is $45,921.80. And typically, you also have to pay legal fees. That is in the amount of approximately $2,500. And then you'll have to pay Ontario land transfer tax, which is $10,659.36 on an average home. And then you may have to pay Toronto land transfer tax, which is for Toronto properties within the Toronto city limits. And that is another identical $10,659.36. So we're getting quite up there, but we're not done yet. You're also going to possibly have to pay for an appraisal if the bank is requiring one, and that is $450. And then on top of that, you will have your home inspection, which will be another $450. And some things I didn't include on here are like moving expenses or pizza for helping your friends move. But the total closing cost for what I did include, which is what we just talked about, was $70,640.52, which does amount to almost 10% of the purchase price here. And if you have any questions about that, please do reach out to me. I'll be happy to go over the closing costs with you. And specifically, maybe we can look at the type of home you're looking at in your market, and I can help you determine what you can afford based on your income pretty quickly by just having a chat on the phone. And we can look at closing costs and give you an idea of what you should expect when you're buying a home as well with your closing costs. And that way you can get pre-qualified and have your closing cost estimate right up front before you ever even get into the market. And that's really good information to know, because as a home buyer, when I was getting my mortgage, the bank never really provided that to me. So just knowing that up front is a really great way to help yourself enter into a purchase like your biggest financial decision of your life with more confidence and armed with more information to be able to make the best decision possible. All right, so let's just chat about some other mortgage news that I have here today that I wanted to cover off with you all. I'm just trying to see here how to get a new tab. There we go. And we're going to look at the 5-year Canadian bond yield. That's telling me where fixed rates are going today. And it looks like the 5-year Canadian bond yield has been rising. We're over 4%. It's the highest it's been since 2011. Let's take a look here. I'll see if it's gone past any other levels. All right. Actually, highest it's been since 2007. Quite crazy, actually, with the 5-year bond yield that high. We'll have to see if it's going to affect fixed rates terribly, but I know that I've been seeing fixed rates go up all week right now, with lenders sending out rate increases each day. It seems like a different lender's raising their fixed interest rates. So 5-year bond yield is showing me that fixed interest rates are rising right now. And if I look at other metrics in the Canadian mortgage market, such as the Canadian inflation rate, that is currently sitting at 2.8%. That's a decrease from May of 2023 of 3.4%, which represents quite a large decrease. And it gives the impression that the Bank of Canada has been doing the right things by being able to provide tightening with rate increases to be able to bring down the inflation. Now, it's still high with inflation being over 2%, and the government of Canada was looking at inflation for an inflation number of 2%, and we're not there yet. So they're going to keep an eye on this. And from what I understand as to what's happening at the next rate announcement, which is dated for September the 6th, Wednesday at 10 a.m., keep in mind, I'll be doing a live podcast at that time here on Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast. And I'll be covering the live rate announcement at that time, but they'll be watching this inflation number. And one thing they're going to have that we don't have today is the inflation numbers for July, because they have here May, they have June, they don't have July. And it'll be good for them to have the July numbers on September the 6th. I know that the August numbers won't be really available until September 15th, so that is after the September 6th rate announcement. So they'll have to rely on those July numbers, and those are going to be coming out in about 13, 14 more days. And with those numbers, if we see inflation go down any further, they might put a pause on rate hikes. If it goes up or stays the same, then I could see the Bank of Canada taking a very reactionary approach where they will tighten further on September the 6th, probably by a quarter point. And I know no one really wants to hear that. So I'm just going to say watch for those inflation numbers. They're coming out in about 13, 14 more days. We'll know at that time if they're going to raise rates again. Another metric that I'm following as a broker wanting to know what to kind of forecast for my clients is the unemployment rate. And if unemployment starts to skyrocket in Canada, we can be certain that the government will step in and lower rates right away to stimulate the economy. But right now, unemployment really has maintained, if not really just stood at a very low rate for the last few years now. But in the last 2 months, I have seen a trend where unemployment has started to creep up. It did rise 0.2% in May of 2023. It rose as well as 0.2% in June of 2023. And we will shortly have here on Canadian Mortgage Weekly the unemployment numbers for July of 2023. So if we see unemployment at that same rate or lower, then rate hikes on the table. If we see this unemployment number go up, it will take a considerable amount of it going up for the Bank of Canada to lower rates. But if it does go up probably more than 0.2%, I'm going to say that the Bank of Canada may consider also pausing on the rate hikes. But if it stays the same or if it goes lower than 0.2% in terms of smaller, then probably no rate hikes. No, the rate hikes are definitely on the table, is what I'm trying to say. So that's unemployment numbers. And just before we finish off today, I'm going to cover off a few more things. That is the US inflation rate. Let me just get to that here. US inflation rate currently sitting at 3%. That is for June 2023. We will have numbers for July 2023 very shortly, probably in a week or two. And then we can see where the US is headed. I know they just tightened again on July 26th, 2023, where they rose the rate in the United States by a quarter point. And knowing that also makes me feel like the Bank of Canada may take an approach where they will stand with the US and move their rates up. However, if they do that, it's not going to be great for Canadians out there because a lot of Canadians right now are paying a lot more in auto interest costs, home insurance, home interest costs, and borrowing costs right now with rates higher. So it's really making it hard for Canadians with debt specifically to make those payments. Okay, and then one final metric we'll look at today is the 3-month interbank rate, that's sitting at 5.5%. Hasn't changed since last week. So it means variable is still a bad idea. Only take a variable rate mortgage. Currently, if you're really needing some flexibility, and your broker or banker can talk to you about that. So again, my name is Joe Bladek here on Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast. I have been doing this now. This is my 151st episode. So very pumped to be here today, to be able to stream this live on YouTube, Facebook, Instagram, TikTok, X, and take a follow, add me, friend me, hit that plus sign, subscribe. Would love to have your support so we can continue pumping out these videos, and keep in touch this week as I release a video about each closing cost that we talked about this week on my channel, where you'll see a TikTok or a short with that information. So we'll see you next time. Thanks for watching Canadian Mortgage Weekly, Canada's only weekly mortgage video.